And they delivered. Yes, the ECB with back-to-back three-quarters of a point increases on their rate brings their deposit facility rate now to 1.5%. Their marginal lending rate moved from 150 to 2.25, 75 basis points, and their main financing rate moved from 1.25 to 2%. We see that the 10-year in the U.S. yields haven't moved much from 406. The euro currency, though, is dropping. And do remember, the euro closed yesterday above parity for the first time since September 19th, since its low on the 21st of October. Not that long ago, it's up nearly 4%, but obviously we're going in the other direction now. And if we look at what's going on with bond yields, they are dropping. They were hovering right around 219. They've dropped about 8 basis points towards 211. Their high water mark was on the 21st, the same day the euro, of course, made its low. The high water mark in rates was 242 on a bond. So you could see it has moved lower like many sovereigns. We're going to continue to monitor post-press conference with Christine Lagarde. Many want to know how this increase is going to affect the weaker economies like Italy, like Spain, that are, of course, going to have to potentially see some of their debt serviced and purchased by Christine Lagarde in a multi-pronged approach, which is awfully confusing. Becky, back to you.
Hey, Rick, that was what was expected, at least by economists ahead of time, that they'd do another 75 basis point hike. Seeing the euro drop like that, though, was there some sort of whisper expectation that maybe they'd do even more, or was there some sort of expectation that there'd be stronger language than they saw in the initial press release?
Well, I think we're going to have to wait for the press conference. But in my opinion, watching what's going on with regard to rates moving a bit lower and the euro moving a bit lower, most likely has to do with the recessionary implications and the slowing of the economy. We all know that there's an awful lot of natural gas all of a sudden that seems to be floating around. Infrastructure and costs are still a major issue. And, of course, we saw that Germany is going to subsidize their high energy costs to such an extent that they put the rest of Europe at a disadvantage. And all these issues are negative for their economy, which is most likely trumping what we are seeing and what we expected that was delivered by Christine Lagarde and her committee.